Life Management Science Labs would like to acknowledge that we live and produce this podcast on the traditional lands of the Wurundjeri people. We'd also like to acknowledge the traditional owners of the lands of our listeners and our international colleagues. We'd like to pay our respects to their elders, past, present, and emerging. Hello and welcome to Self-Improvement Atlas, the personal science insight podcast produced by LMSL, the Life Management Science Labs. We are champions of life management science, providing structured insights informed by science and inspired by practice on key aspects of conscious living. Each week, we bring you scientific and practical insights on each element with the expert knowledge of professionals in the field. I'm your host, Aditi Kutty. Let's get on with the show. Welcome to Self-Improvement Atlas. Once again, I'm here with Paul Milbourne, who is a personal life and income protection insurance advisor and also one of Australia's leading business protection specialists. Thank you so much for joining me in the studio today.
Thanks for having me, Aditi.
It's always wonderful to have someone in the studio because I find it's just so much easier to talk that way. But can you tell us a bit more about yourself?
First of all, I agree. I've got significant Zoom and Microsoft Teams fatigue. So definitely enjoy seeing people, seeing the whites of their eyes and having a real conversation. But yeah, look, I guess a financial planner is what I am by trade. However, I specialise in the business protection and the personal risk insurance space. So if you pull the jargon out for a second, in reality, I give advice around life insurance, income protection, trauma insurance, disability insurance. And as I often say, I use life insurance contracts to solve real business problems. So often working in the space where businesses have multiple shareholders that aren't husband and wife, and helping create funding mechanisms to transfer shareholdings if someone passes away or becomes disabled, which those documents are often written in shareholders agreements, and equally helping fund retirement of debt should the person that created that debt pass away within a business or again become disabled, and also creating revenue protection inside businesses. So should, a significant health event happen to a rainmaker or a key person inside a business, making sure there's cash to come into that so the business can keep moving forward and get through that current issue.
Yeah, is that very common in business? Because I feel like that's something that often goes unthought of, I think, especially when people are creating their own businesses and starting.
Yeah, so it's interesting. I guess a lot of this comes back to how advice used to be distributed and how life insurance, and I use these words clearly, used to be sold. So I think it was relevant when we had life agents back in the old days, when banks used to give advice. We certainly had a lot of it. As the market has matured and changed and the banks have left the advice industry, the market has shrunk. But equally, Aditi, all it means is there's more people that have these problems and more businesses that have these problems. And one of the key reasons being is, if we think about this, the backbone of the Australian economy is the small business owner. Most of the small business owners, ignoring the business, they're a husband, a wife, a father, a mother of a family.
Yeah.
And the backbone, again, of the Australian economy is credit. And these business owners, they're borrowing money. And usually when they're borrowing money, a business owner signs twice. They sign first of all for this piece of debt as the business owner, and then they sign as the guarantor. And what that does, Aditi, is in reality, it replaces the family as the first heir of an estate to the lending institution. And it moves that family from a place of a security and assurance, I guess you might say, should the business owner pass away or become disabled, to a place of uncertainty. And what people like myself do, if in really simple terms, is create a mechanism through insurance to pay out debt and retire that debt should certain events happen. If we do that, we remove the bank, in reality, as the first heir to the estate, and replace them back again with the family.
Yeah. So it's kind of consolidating, I guess, that legacy and making sure that the business stays within the family instead of heading, in the case of, especially if a primary business owner and a small business has passed away or become disabled, that's a real struggle.
Correct, yeah. Allows them to move on with business continuity, their business continuity plans, and in a really bad and crappy situation, at least deal with one of the biggest issues.
Yeah, absolutely. Well, we are going to talk a lot about that today across our episode. But first, we have this segment called "Have You Met Paul Milbourne?" where
Fantastic.
I ask you a little bit about kind of your preferences around pop culture and that kind of thing, and then our audience can kind of get to know you a little bit better before we start talking about the sometimes mystifying topic of insurance. Are you happy to answer a few questions?
Certainly, Aditi.
Fantastic. What is your favorite book, if you have one?
My favourite book, it probably evolves or changes. It's actually a book called Venom, I should say, not Scorpion. And I can't think of the Netflix show that happened a couple of years ago, but it's about a young Indian boy born in Saigon that goes on to murder lots of people. And for the life of me, I can't think of the Netflix series right now. I might have a look at it. But the book itself's called Scorpion.
Scorpion. Okay, cool. When you said Venom, I thought of the superhero, the Spider-Man guy. No, for sure. I was like, that's not a book, or it is technically a comic book, but either way. What is your favorite movie? I'm assuming it's not Venom.
No. I don't really have one, to be honest. I don't watch many movies or sit down for long enough. But if I probably did, it'd probably be The Hangover or Step Brothers or something like that.
Yeah, an easy one. What's the last one that you watched?
Actually, it was Step Brothers for about the 400th time.
It is a great movie. It's a huge rewatch value from that one, for sure.
I'm probably more likely to watch the 2022 Geelong Grand Final on replay.
Right. I think that's a movie. I think that's got dramatic value. That counts. What about a podcast you've been listening to lately?
I listen to a few, besides football and cricket podcasts when they come out. There's a couple of podcasts out of America I listen to, probably one a bit similar to this called the Influential Personal Brand Podcast. So I listen to that a fair bit and their guests. And there's another podcast as well by I guess he's a business coach. He's been doing it for 40 or 50 years. And I've just stumbled across his podcast and he does a 10-minute episode every single week, but I've got to go back 10 years and just work through it. Yeah,
I feel like especially with a 10-minute podcast, you can just binge them so easily.
Yeah.
But then with 10 years of podcast is a lot. I'm sure that's a lot of minutes to go into. Do you have a famous role model that you looked up to?
A famous role model I looked up to? Look, growing up as a kid, it was either Shane Warne or Gary Ablett. I think that would have been like most people that grew up in Australia in my demographic background. Mm-hmm. Professionally, I think I've been very lucky professionally to have worked at various times with some really fantastic industry leaders and business people. So a gentleman called Terry Brain who did an awful lot in my particular industry through the 70s, 80s, 90s and 2000s. Mm-hmm. And equally where I work today, one of the directors, Michael Wilkins, for the 7 or so years I've been where I am, has been fantastic as well for me.
Yeah, absolutely. I feel like that's 4 for the price of 1. So that's a great answer, in my opinion. What about the last course that you completed?
I'm currently finishing a grad diploma in financial planning.
Oh, awesome.
So I'm one of those lucky people or unlucky people, Aditi, that started in financial services when it was a cottage industry.
Right.
And have been through the journey of, degrees on the back of Weet-Bix papers through to now the requirement to have a real degree. So
yeah.
I had to do 4 units to do that. So I've got 2 units left to finish that.
So is it kind of like is it a semester or term-based thing? When do you finish?
Semester.
Right.
I should finish at the end of this year.
God, good luck. As a uni student myself, I sympathise. But that does bring us to the end of that segment. So you are known and our audience has gotten to know you a little bit. And now we can finally move on to the meat of our episode, which is about life protection and business protection in particular in the context of that life insurance and what you were talking about. Our podcast is about personal development. So to start off very broadly, I wanted to ask you, how do you define personal development?
It's an interesting one, Aditi. I mean, I think personally I've been on a bit of a journey and I've only, I think in reality, maybe discovered this as it's become a bit more popular as well. I think back to some job interviews I did 10 or so years ago, and they were saying, how did you get to where you are today? And I was talking about, I just watched YouTube videos, which is probably half of what you do as well. I'm a massive believer in you've got to invest in yourself, and only you can control your destiny. I don't think people that rely on their employer to fund them on studies or send them on courses or conferences. And I know this personally, that if my employer pays for something, I'm probably less likely to actively engage than I am if I'm going to write the check from my family's joint bank account. But I'm a massive believer, and if you don't challenge yourself to get better and improve whatever aspect of your personal and professional life, you're going backwards. And equally, in a bit of the whole person as well. There's no use being better at your job if you're not a better person in your community, or in my case, a better husband or a better father.
Yeah, absolutely. I think that having that balance is so important to making you better in every aspect almost. Yeah.
Yes.
Yeah, for sure. And what do you feel are the main challenges towards personal development?
Time.
Yeah.
Life has never been more demanding. And, as someone that's in a service-based role, just the demands that we talk about, the demands our clients have on us, but we have them on our service providers and our clients as well, is that we're in this world of instant gratification and everything at our fingertips. And there's been that big blur in the last few years as well, I should say, around, we used to have this thing called work-life balance. I think now it's genuinely work-life integration. And we're trying to work through that as well.
Yeah.
I think a lot of the work I'm sure you're doing is, around how to reschedule your day and how to structure things and how to put me time in. I don't think anyone's worked it out exactly. Maybe Tony Robbins or someone like that, but it's time. And then the noise is the other hardest one as well, because you get pulled in 5,000 directions. And I think we're almost at a point where we have to be more selfish about ourselves than ever before.
That's true. I feel like, at least for me personally, and I don't know if you found this yourself, the time and the noise are often interlinked. It's like I have a very finite amount of time, and then there's that noise kind of eating at it very slowly.
The worst thing ever, Aditi, is Microsoft Teams in a professional environment.
Yes.
And then your phone office number now runs through it, so you can be on a Teams meeting while someone's pinging you on Teams, while someone's calling your landline through Teams, while your mobile phone's ringing and someone else is SMSing you, and a WhatsApp's going off in a Facebook Messenger.
Yes.
We forgot about emails as well.
Emails too. I'm so glad that you're bringing up Microsoft Teams slander, because it is my least favorite thing. I'm so sick and tired of it. It doesn't even work half the time when it does. I want to add that we're not affiliated with any platform on this podcast, but I'm very here for the Microsoft Teams slander. So for it. I guess we might kind of focus in on our topic for the day, which is insurance protection, specifically in your specialization in business protection. So how do you define insurance protection?
Yep.
And we might handle the question of what business protection is a bit later, although you did kind of explain it at the start too.
No worries. I try and keep things really simple. So in terms of insurance, at the end of the day, everybody loves something or someone. And in reality, if they love something, whether that's their house, their car, their phone, the wedding ring, the watch, they're usually going to insure it. Obviously, I don't deal in that side of the insurance landscape, but I deal in on the side of if we love someone, and that aspect of it. And we go through a life journey at the end of the day, and we're all somewhere on that life journey. However, I genuinely feel that if we have responsibilities in life, and those responsibilities can change from just ourselves to looking after a family, children, parents, if we own businesses, to looking after our staff, our community as well. But if we love someone, then and we're financially responsible for them, then we probably have some kind of responsibility to ensure them or us being financially protected in some way as well.
Absolutely. I think sometimes we forget that insurance is about protection rather than, I guess some people see it as a scam in some ways, or just kind of like a just in case kind of thing. Like it very much is peace of mind.
Well, the thing is, Aditi, I mean, insurance is just a contract. I don't care what insurance it is. It is just a contract and the name of a policy. So, whether it's car insurance, well, it's just car insurance, right? I mean, I don't know how many car insurance policies they are, but there's thousands of contracts.
Yeah.
In my space, whether it's disability or income protection, it's just the name of something. Yeah. It's the terms and conditions that are really important. And certainly we can go online and purchase something. We can trust our super fund in what it might do, a comparator website, the general market. But certainly, I guess, the reason why I believe people see me and see the other 16,000 financial advisors, by the way, is they have an expectation of what a claim should look like for them.
Yeah.
That if they suffer a certain health event, they have an expectation of what the financial outcome should be and what the claim should look like. And I really believe it's a financial advisor's job to understand that and then ensure that within the client's budget, those demands or needs can be met or prioritised depending on what that might be. And probably a really good example, certainly a lot of people I work with on the private or the personal side, is you've usually got, decent income families, kids at private schools, mortgage usually at its highest level as a result. The families are enjoying their life, but there's an expectation of, well, I'll use my family as an example. If I'm not here today, my wife still needs to have a roof over her head. My girls, they finished school now, one's at uni, but she still needs to be educated. They still need to put food on the table. And if, in a single income family in our case, if something's going to happen to me, it's going to affect 4 people.
Absolutely. And that kind of leans into my next question about business protection specifically, which is what you were describing earlier, and that people are running small businesses and something happens to the main kind of business owner, the main breadwinner, single income families in your case, something needs to kind of be put in place to protect the rest of the family.
Well, I can give you a great example through that we're dealing with right now. First of all, it's a cracking business. And this is the wonderful thing, right? People can look from the outside and go, oh, they've got a great car, they've got great holidays, but you actually don't know what's happening in the balance sheet, in the business, the real world. A lot of businesses, if they're not in pain, they're about to be in pain. There's, potential recessions going on. Working in an accounting firm, I get to see some of the front end of those client discussions. But we've got a client where it's a 3-partner business. There's a fair bit of debt in that business. Each of them, the directors, is jointly and severally liable, which means one in, all in, to keep it nice and easy. And they've got some guarantors on their family homes as well. One of them passed away very suddenly about a month or so ago, and the bank closed down or stopped banking facilities because they had covenants on the loans that they could allow to do that. And they needed to be comfortable as to how they were going to get their money back.
Yeah.
Is this an ongoing viable business? Are we going to get repaid? And we can bank bash all we want, but they're within their rights and it's in the contract. And whether you're buying a house, a car or a business, when you're looking for money, all you care about is the money. You're not so concerned usually about the T's and C's.
Yeah.
And in this particular circumstance, what we were able to very quickly do was give the bank absolute comfort of, here's a certificate of currency that says this amount of life insurance will be paid out to this particular entity. It was backed up with a legal document that was drawn up at the time. And the bank quickly released, the business could trade again because they were comfortable as to what was going to happen.
Right. Yeah. Is that common in that when someone passes away, is there a way to prevent that and let the bank know beforehand? How do you go about it?
Well, death doesn't always happen at the right time. So
Unfortunately not.
You can't always front foot some of those things. And look, prevention always is the best cure in that respect. But within that, Aditi, I guess, we're dealing with something post-event, and the best way to deal with it is in preparation. So I always tell my business-owning clients that the best way to plan for the worst-case scenario is when everyone's happy, healthy, and in love. Because especially when you have business partners, you're not always guaranteed to be happy, healthy, or in love in the future.
Sure.
And that way, a documented, and I'm talking everything here, document how we're going to deal with, whether it's divorces, marriage splits, significant health events,
Of course.
one of us wanting to retire, one of us wanting out of the business. If you document all of that in a place that's good, not in a place of dire need, then usually you can pull the rule book out, so to speak, and refer to the rule book.
Yeah, for sure, for sure. How do you feel all of that relates to personal development?
It's an interesting question. After we were discussing it a little bit before, I think I take a bit of a left of centre view, but equally a lot of the life insurance companies do as well. The reality is you're buying a personal insurance contract at the end of the day not wanting to claim on it, because if you are claiming on it, you've had some kind of significant health event, whether that be an illness, an accident, or death. So in a lot of cases, self-care is where we're coming into things from here. We know that mental health, for example, is the number one rising form of disability and income protection claims. We also know the ramifications that mental health have on other comorbidities. So things like cancers, strokes, heart disease, they're all interlinked. I was actually at a seminar yesterday, and one of the I guess we'll call them add-ons from a life insurance company was spruiking their health and wellness package. But they've been doing it for 10 years now. They've got some really good data around different cohorts where they've given them fitness watches and sort of said, hey, these were a cohort of people that were overweight and we gave them exercise challenges, got their weight down, and, here's the benefits. And we can now compare that from a claims experience to people that don't look like that. And also no different when we actually do have health issues. We do know that people that are healthier recover from their health issues far quicker. So that's not quite the direct personal development answer, but I think it comes down to the whole self-care. Equally, what we know is that should you suffer from, a significant health event, do you want to be worrying about your finances?
Yeah.
And, for anyone that's seen me on LinkedIn, I've posted about this a few times, that nothing crushes my soul more than seeing a GoFundMe page for a poor, wonderful young family, usually, who is raising $20,000 or $30,000 so, they can pay the bills for a little bit.
Yeah.
When all of that could have been solved through, a trauma insurance contract, for example, which would usually, with some good financial advice anyway, cost far less than donations and, potentially pay out a much larger lump sum when a family's in need. Yeah. And, I know this from my clients, taking away the financial stress and allowing them to focus on their recovery is one of the most important aspects of their recovery.
Yeah, for sure. And I'm also thinking, I guess, in the event of death, they're probably not worrying about their financial situation as much, but it means that their loved ones don't have to deal with all of that on top of grieving the loss of a loved one.
Certainly. So, I probably should have asked my sister permission to tell this story, and her friend, but my brother-in-law passed away from cancer when he was 35 years old. And the good news, I guess, of this is my sister was left financially secure for the rest of her life. A few years after that, one of their close friends, who I think she just had her second child at the time, husband was diagnosed with a very aggressive form of cancer. And I get this because I have these conversations every day, but we've got Medicare, I've got private health insurance, the PBS, etc., etc. but not everything's covered by the government. Not everything's simply there. They had to spend substantial money, and I'm talking hundreds and hundreds and hundreds of thousands of dollars for preventative medication to keep this gentleman alive. And I think from memory, he was diagnosed when the second child was 2 or 3 weeks old. So it was that new. He only lived for 6 months. By the time, and I understand exactly, because we would all do this. We would sell our houses, our cars. Our parents would, refinance their house. We would all do this. When he passed away, that was the situation that was left. He left a wife with 2 young children with nothing. Yeah. And again, all of that could have been solved through some forward planning.
Right. Yeah, for sure. Oh, I don't really know how to segue from that.
That's a tough one, I get it.
It does answer my next question of why insurance protection is important for the individual. But I guess to kind of go into like the nitty gritty, okay, people are convinced they need to get insurance. What do we need to bear in mind when we are searching for an insurance provider?
So obviously as a financial planner or a financial advisor, I'm going to advocate very strongly for the 16 or so thousand financial advisors in Australia and look you in the eye and say, Aditi, the value a financial advisor can give you in providing advice around the products you need, matched to the outcomes you're looking to achieve should something happen, the sums insured, the styles of contracts, the structure of the contracts, that to me is paramount. And I often think about this because my younger brother would say that if I can get it cheaper online, but equally that can be a misnomer sometimes. But it's back to my earlier comment of, contractual definitions are the most important thing.
Yeah.
And every time I hear someone, usually poo-poo a disability or an income protection contract, it is simply because they have a junk contract.
Right.
That they have through their super fund or they purchased online. The value of advice is certainly there. So that's a long-winded answer, but search for a financial advisor. There's 16 or so thousand of them out there, and they will help steer you in the right direction. The other things really to consider are, and I ask my clients this, as well, and I say to them, I don't want you to go into solution mode. Don't tell me how you're going to solve the problem. But tell me, if you didn't get up this morning, what would the financial ramifications be? I don't think you're married, Aditi.
No, I'm not. No.
We'll use me as an example. I'm married, adult girls, but equally, they're still financially responsible. If I couldn't get up this morning, once my sick leave is done, there's a bit of money in the bank, but we would start to struggle to pay the bills. So at some point, if I have a significant health issue, I'm going to need to replace my income.
Yeah.
I'm far too young to retire and have not built up my own empire yet to be self-funded retired.
Yeah.
So I'm going to need help making sure that I can get through that journey. Equally, because we're a single income family, the reality is I'm going to have to look after my wife for that journey. We made that election for her to raise the children.
Yes.
It is, I'm financially responsible for that as well. The other side then is, and obviously life insurance does talk to that as well, but it's if we do suffer a significant health event, and I'm 40 now, Aditi, so statistically speaking, 42 is the magical age where all of a sudden, allegedly, we start to find little things going wrong with our bodies. That's not to say younger people don't have things like cancer and strokes as well.
Yeah, absolutely.
But yeah, statistically speaking, 42 is the magical age.
That's terrifying to know. I still have a while to go.
We could sit here and have a very morbid conversation.
Yeah.
Equally, what scares me, though, is the fact that we haven't been going to doctors for 3 years. So, insurance companies tell us that at 42 is a magical age where there's a little bit wrong.
Right.
But we can repair you, right? And you'll be off work for 3 months, 6 months.
Yes.
But without going to the doctors for 3 years, in reality, for a lot of Australians, and we're seeing this in our client base now, they're coming to us with a lot wrong.
Yeah, absolutely.
And within that as well, what does trauma insurance do? And this is because trauma insurance is not sold or packaged through a super fund, most Australians don't have it. It's you've got to usually see a financial advisor or actively seek it. Ignoring what it can do. What does it do? It simply transfers financial risk from your balance sheet that you may or may not have to an insurance company through a lump sum payout. I don't care whether that lump sum's $10,000 or $2 million. Everything's relevant to a premium, and I understand that. But what does it do? It provides a form of financial security. And certainly, I mean, this morning, Aditi, one of my clients received a $400,000 check. In November last year, she was a very fit and healthy, mid-50s woman, looking forward to, her husband is a few years older, slowing down soon and the future. And she woke up pretty poorly one morning, and the next 4 months has been a downhill slope, I think is the best way to put it.
Yeah.
She has a very, very aggressive form of dementia.
Oh, goodness. Yeah.
And while $400,000 sounds like a lot of money, that'll go fairly quickly in giving her the care that the family need, if that makes sense.
Yeah.
The family need, because in their particular circumstance, her husband still has to go to work, or he's now got some choices to go to work, but up until that check, he has to go to work. Their children are adults. They don't live in Melbourne. Her parents are elderly and they don't live in Melbourne. We've now got choice. Other people use it on medical. I've got colleagues that, went to Russia for revolutionary treatment that cost hundreds of thousands of dollars. That's what it was used for. And it's back to my comment on how my soul gets crushed when I see people raising money, and GoFundMe pages are fantastic. So I'm not poo-pooing them in any way, shape, manner or form, but I look at that and go, trauma insurance in particular, but life insurance, all it is, it's a sophisticated social version of a GoFundMe page where the community has got together, they've collectively paid some premiums, and when a member of that community needs to call on some of those premiums, there it is for them.
Right. Yeah, for sure. All right. That brings us to the end of the main segment. So thank you so much for answering those questions. We do have our next segment, which is called the practice/habit experiment debrief, where we try to take a bit of what we've learned and put that into practice. So what do you recommend to people to maybe try at home?
Gee, this is a long rope, isn't it?
It is, isn't it? It's quite a long rope. Well, I guess another way to phrase it is like, do you have something that you do to kind of, I guess, maximize and make the most of your insurance?
Yep. There's a few things there, I think, Aditi, and I think to me, and this may be just beautiful timing given what I attended yesterday, I believe that the Australian public is actually looking for more from their life insurance providers as well. We're now in a global world, and our life insurance companies are also in that global world. None of them are owned by Australians anymore.
Yeah.
And I think that's good because it actually gives us global aggregation of data and expertise. So there's a couple of things to that, is that they're also morphing themselves into health and wellness businesses as well. Why are they doing that? Because they know prevention reduces claims. And equally being healthy and gets, an injured or ill person back to work faster. And so that I find is interesting. So I'd encourage people, if you do have a life insurance and income protection or disability contract, to have a look at what your insurance company is actually providing in that health and wellness space, because there's some really good apps, benefits. A few of them now, in fact, also have access to, I'm going to call the best doctors around the world.
Okay.
So if you hold a policy with some of those insurance companies and you've got an acute health issue for you or a relative, you actually can access those. And we've heard some fantastic stories. And I heard one yesterday about a claimant who had a very, very sick young child, and they used the service, and there was a specialist in Sri Lanka, of all places, that just happened to be an expert in this particular disease.
Wow, yeah.
And the family was able to scrounge together enough money to take the young child to Sri Lanka and move them from, not being able, your child will no longer be here before kindergarten, to now being 22 years old. And that was all through accessing one of those services. So I think, there's so many apps out there now, and certainly the insurance companies are equally promoting that. The other one to that as well, Aditi, is we're seeing more and more is that if you are on particularly an income protection claim, they're offering, I'll call it intervention services, but not in a negative way. And we're seeing that more and more as well with, how can we work with you to give you some form of quality of life, whether it's return to work, be, active in the community again. So I think from that insurance lens, and the other one is I think mental health as well. And we've discussed it, but we're seeing this in our business. The industry is seeing it as a whole. It is so people often complain to me, Aditi, about, and you're a bit too young for this, but, why has my income protection premiums gone up so much over the last 6 or 7 years?
Yeah.
There's a couple of small reasons, but there's a really big one. And it's centered around that mental health. And I guess, this podcast certainly is addressing that as a broader community-based issue, but taking care of ourselves. If this was Paul of 10 years ago, he'd be laughing about this, to be honest. It's just, and maybe it's a bit of the, not that I'm that old, but a bit of, the age and socio, demographic, but we see it and see it every single day. And, the pressure of just the world piling up. So I think self-care, preventative self-care, whether it's, apps like Calm or the insurance companies and what they might be providing. We spoke about some of this earlier, and I don't think we have all the answers yet, but, whether it's working out what work-life integration might look like or work-life balance might look like, and putting boundaries and structures in place.
Yeah, sure.
and taking care of ourselves. And, if you were talking to a traditional financial planner here about budgeting, for example, they'd be talking about paying yourself first.
Yeah.
And I think from our health, and in particular our mental health, I think we're now at that point where we need to pay ourselves first.
Sure. I also feel like, just the pandemic, being us in Melbourne being stuck at home for almost 2 years, or the better part of 2 years, has made mental health kind of just unavoidable to think about. Like, it's just, we can collectively feel how much it's been eaten into over that time.
Aditi, I can tell a million war stories, but I was managing a team of, at the start of the pandemic, I think 25 or 30 advisors, and then we had our support staff, and I would look at some of my staff in Victoria in particular, and they were single mothers, 2 young children, and I thought, I didn't have any of those problems, and I'm still struggling, let alone I don't have to make breakfast, lunch and dinner, homeschool. I'm just dealing with clients every day and business issues. And my girls were big enough that they didn't need me to kick their backside to do schoolwork. I couldn't fathom how, with the pressures that we had for 40 hours a week, to then add on the home life as well. And equally, it's a bit of a tangent, but as someone that got to have a bit of a national and an ANZ lens on that, I genuinely don't think people from the other states actually understood the impact it had on people in Victoria. That a lot of the other states had the choice, or it's recommended to stay home. They had that choice, and they reorganised their life. We didn't have a choice. And that, what I think that done to a lot of our heads, to have the choice of what you can and can't do, and the freedom's taken away. And I don't think we've seen that fully, or I think we've seen the start of that playing out. And this is horrible, but if you talk to family lawyers, or lawyers in general, the two biggest growing parts of their practice, family law and estate planning or estate contesting.
Yeah. I mean, a quick plug to my other podcast, Reloscope, where I talk to a lot of relationship experts, but they've talked about how bad the effect of the pandemic all over the world, but also in Melbourne, has been on relationships in particular. And that also ties into, kind of what we're talking today about life insurance, and if your family changes, keeping on top of that and making sure your money is going to the right people. Yeah.
That's, again, probably a plug for the 16,000 financial advisors, and why using an advisor is so important, Aditi. Because if we go to the worst case scenario here of a family breaking up, and I'm going to put 5,000 caveats around this is not advice, and speak to an advisor.
Of course.
And I'm not giving taxation advice and everything else. But,
of course, yeah.
But superannuation law is really specific and bespoke, and how death benefits should be paid out. And if your marriage is broken down or relationship's broken down and you pass away, where that money goes may not be where you want it to go, or how it's used may not be how you want it to be used. And I mean, quite genuinely, I'm dealing with that again this Friday.
Oh my goodness, yeah.
You know, and we think about life insurance being so simple, but in this particular case, we need money to get to a certain spot at a certain time in a very bespoke fashion.
Right.
And due to the relationship breakdown, the way it's currently housed will not achieve that.
Oh, geez, yeah.
And so those are the little things that, you know, advisors can really add value to their clients around, you know, when changes in circumstances, changes in lives. And, you know, going back to that same thing I say all the time is that insurance, the idea of insurance at the end of the day is making sure the right money gets to the right hands at the right time as quickly as possible.
Yeah, sure. I guess going back to kind of our practice, which is kind of that preventative self-care, what are the challenges around this? Why do you think people might be inhibited from practicing proper self-care?
I think it's time, isn't it? It's back to
that. Yeah.
Yeah. It's again, it's harder today than it's ever been in reality to find time. You know, again, we were talking before about what we don't get taught at school. And I don't have primary school age kids, so I really can't talk to some of this exactly.
Yeah, for sure.
But I'm sure, again, structuring our days, structuring our lives, these are the new skills that we have to be taught. And I do know this from my nieces. They practice mindfulness, I think it is, after morning recess and lunchtime.
Oh, okay, cool.
Every day.
As part of school?
As part of school, yeah.
Oh, okay.
Yeah. And now we're talking, I think about this. I read that book, was it The Resilience Project, and sent it through to one of my sisters. And they talk about, you know, practicing, the book talks about, you know, practicing gratitude every night. And they now do it with my nieces who are, one can't talk. So they must be 3 and 5, I think the two that can talk. And, you know, what are they grateful for every day? So I think it's, you know, maybe we're starting on that next part of the journey.
Yeah.
But equally for, you know, people my age that are 40 years old, we're learning a new trick, and we're probably a bit of an old dog trying to learn a new trick.
Yeah, for sure. But it is worthwhile going through that, for sure. Would you recommend this kind of preventative self-care? And this feels like a no-brainer, but I like to ask it just to be explicit. Would you recommend it to everyone? Or are there groups of people that maybe this advice doesn't quite bode well for, or doesn't quite jive fully with?
I think everyone needs to look after themselves. But yeah, you know, look, we all have different versions of medicine. You know, plenty of people sit there with the sports bet app on all afternoon and all night. We could go across the road to the pokies, and I'm sure we'll find some wonderful people there doing their version of self-medication. And that's not to look down on people that gamble, by the way, or choose to go to the pokies. But you know, we know each of those forms ruin lives, let alone alcohol, drugs. I'm constantly baffled, Aditi, that, you know, that statistic that 100,000 children sleep in danger every night. I can't picture it or fathom it, you know, given I was raised in a very loving, safe family, and equally my family is the same. But we know this, that, you know, most of those issues, a lot of those issues, I should say not most, ultimately come out of, you know, people that are dealing with their own issues and their own demons.
Yeah, absolutely. I think addiction, unfortunately, is a disease in a way. It has to be cured.
Definitely.
Do you have any recommendations of a practice or a habit that might be combined with preventative self-care? Off the top of my head, you've already recommended getting a financial advisor, which would definitely help.
There's I should have prepared for this. I've been doing a roadshow with one of my colleagues, and he talks about the value that a financial planner brings around, and there's been a study that's quantified the extra investment performance you get through the mental aspects, shall I say, of financial advice. But for me personally, I guess I'll talk to what I've done, and again, that's been a journey as well. But if I go back 10, 12 years ago, you know, I used to stay awake until the American stock market had opened. Up or down didn't matter. because I was thinking about it anyway. Wake up at 2 o'clock in the morning, go to the toilet, pull the BlackBerry out, just check the S&P 500.
Right.
The brain keeps going again.
Right, yeah.
Wake up at 5:30, flick through the emails, send a couple of notes to my staff. And that manifests right through. Now, by the way, just we don't have BlackBerries anymore, and I don't check the stock markets.
It's
like
much
that.
worse with an iPhone, I think, because it's
Yes.
more accessible.
So I don't have any of those on my phone. But we've fast forwarded now, and COVID was the big one on this. My thumb started getting sore at 10:30 at night.
Wow.
I thought,
yeah.
geez, Paul, you haven't left the house.
Yeah.
You rolled downstairs at 6 o'clock, started work at 6:15, and here you are on your phone sending emails at 10:30 at night with a sore phone. Sore thumb, sorry. This is just ridiculous. And Microsoft has this analytics around what you're doing. And I had something like I responded to an email on average in 11 and a half minutes.
Oh my God.
And why?
Yeah.
Just stupid.
The world won't end if you don't respond to that email.
Exactly.
Yeah. But I totally understand that. Like, I'm the same as well, in that I see an email and I have to answer it immediately, no matter what time of night it is. But I think that's just, it's crazy that we feel that way.
So I started putting a few things in place then, and I took a work email off my mobile phone, But, geez, I'm here with you today. It's 3 or 4 hours, people will be okay. I took Microsoft Teams off my mobile phone. Again, if my laptop's open, I'll be working, right? If I'm not there, then I'll be back to you pretty quick. We still have a thing called a telephone. We can still pick it up and talk to each other. I do know people a bit younger than me, more like your age, don't necessarily like talking.
I'm totally fine with using a telephone, but yeah.
But within that, then I think the big one, and again, a lot of what I'm saying now, I'm not sitting in my ivory tower because I break these rules all the time.
Of course.
When I'm talking to, I'll call it a lot of my staff of when I'm at my best. I'm at my best when I'm not doing work before 8 a.m. because I choose not to do work before 8 a.m.
Yes.
I'm at my best when I'm not working after 6 at night because I choose to. Because I know that I'm not going to solve any problem at 7 o'clock at night that can't be solved at 8 o'clock tomorrow morning.
Exactly. Yeah.
And then putting those structures in place, Stephen Covey's book, The 7 Habits of Highly Effective People, I'd recommend the audio book, I think, because the written one's heavy and hard.
It is, yeah.
But, just some of those things on how you structure your day, it's, nothing's changed when that book probably came out 30, 40 years ago, give or take. Nothing's really changed. And again, I find the best version of me is little things like the 4 quadrants and what's important, what's not important, and how you get rid of it. What structure, what's diarised gets done, all those kind of things. And going back to the mental health aspect, when I'm my best me, I don't feel stressed or worried, and there can be 5,000 things going on and it's fine. If I don't follow my good habits, and I can fall out of those very quickly, the train can go off the track and you get very flustered very fast.
And I think, at least in my experience as well, it's important not to get discouraged when you're kind of building these habits for yourself and setting these boundaries. As you said, it's very easy to break all the time, but it's kind of important to just keep trying.
Exactly.
Yeah.
Exactly.
Yeah. Well, that brings us to the end of this segment, the experiment debrief. So thank you so much for sharing your insights on that. I'm sure our audience will really appreciate it. We do have some questions from the audience. Are you happy to answer them?
Definitely, Aditi.
Fantastic. So I guess the first question is, what are the most common questions and concerns people have when purchasing insurance?
It's cost at the end of the day.
Yeah.
Some moron in insurance marketing some time ago decided to sell the cost, the race to the bottom of insurance. And that's how, pull television up or whatever.
Yeah.
It's sold as a grudge purchase and just get the cheapest and it will be okay.
Sure, for sure.
So that's usually the biggest, I'll call it, mental hurdle. But once we change that conversation to value, cost is what we pay for value, right? Or what we pay for quality at the end of the day.
Yeah, for sure, for sure. This is, I think, probably more about life insurance as a whole as opposed to business protection.
That's okay.
How young is too young to get life insurance?
Gee, great question. I'll go back to, in my humble opinion, what are you responsible for?
Right.
You know, I had a friend that had a child with his now, they've been married for 20-something years.
Yeah.
But, you know, we were in year 12 when she got pregnant and they weren't married. I know he didn't get life insurance, by the way. But the reality was, you know, by the time we'd finished our VCE, they were financially responsible for a young child. By the time we were all 21, they had 2 children in the house. So in that particular circumstance, probably 17 was the answer. In reality, if I use myself individually, you know, I didn't have responsibilities in life till I was 28, 29.
Right. Yeah.
Yeah, you know, in reality, on that one there. So I think it's back to that earlier comment of, you know, in this particular case, if you love someone, you know, you do have some responsibility, whatever that might well be.
Right. Yeah. Yeah. I think once you have dependents, whether that be a spouse or partner, whether that be children, whether that be a dog.
I think the interesting one is, given the changing demographic of the Australian landscape as well, and just to be clear, my wife's Asian, so that's why I talk to some of this.
Yeah.
The responsibilities that are coming from the new culture, or the new cultures anymore, but coming to Australia, and that family dynamic, I think, changes some of this discussion.
Of course.
Of course. You know, because often the children are responsible for the parents. And I see this in some of my staff where, you know, their mum and dad have bought them their house in Australia. They own their house in their home country, but they're sending money home every month now because mum and dad are retired. Yeah. Because they've fulfilled their obligation.
Yeah. Yeah. That's a really great way of looking at it as well, is that if you're a child, you're still sometimes, in some cultures, dependent. Your parents depend on you if they're retired, for sure.
What's been interesting is, even as we move into, I'm going to call it the aged care cycle, because that whole care thing is happening now, is that I think that'll start to change for some of those, I'll call it the average, you know, 40 to 50-year-old maybe Australian who's dealing with that parent who's now in their 70s and having that aged care discussion. A lot of us live well above the minimum age pension. And there may well be some requirements, I think, you know, to look after our parents who have, you know, lifestyle expectations above that as well, whatever that may or may not look like.
Yeah, for sure. And I guess this is, again, more of a general question. And I know you mentioned that we shouldn't talk about house insurance or any of that, but this question is a bit more general. It's what are the main aspects of our lives that require insurance outside of, you know, our health and the personal?
Yeah. Hey, look, it's got to be clear, by the way, if we bought insurance for everything we could insure, we'd have no money to feed ourselves. So there has to be some kind of sensible trade-off. And, you know, I've got 4 cats. Yeah. I'm not spending $40 a month or $160 for all of them. Yeah. To get pet insurance. I've taken a calculated risk that, you know, I'm sure one of them will have some issues at some point. But I believe over, you know, hopefully their 15 to 20 year life journey, not buying insurance would pay off. So there has to be a sensible trade-off. Yeah. But I think, you know, I'm on the spot here, but I would imagine the pen and paper scenario, I think, is the best thing. Pen and paper scenario, and if this happened, what's the outcome? Right, I mean, we'll just use car insurance, right? Technically speaking, if you've got $1 million in cash over there, do you need car insurance? But if you prang your Datsun 120Y into a brand new Porsche, do you want to pay the $500,000? Yeah. So I think there's, you know, that's sensible, putting things down and saying, well, what's my priority? You know, what do I need? And, you know, and what does it sit at? You know, and even reviewing things as well, Aditi. You know, there are plenty of older Australians, if I put this politely, who still have very comprehensive health insurance that don't quite realise they're paying for pregnancy. Right. And they just might be a bit past that part of their journey. Yeah. Yeah, absolutely. Yeah. I guess it kind of boils down to like reviewing your policy as well and making sure that it is still relevant to you. Exactly right. Yeah. For sure. That's the end of the audience questions. We now move on to our final segment of the episode, which is called the open mic, in which I let you have a TED talk about whatever you would like. Did you have something that you feel you needed to address? Many things. No.
It's your soapbox.
Yes. Yeah. No. I might do this 2 ways, Aditi, and I'm probably repeating myself several times, But one of the things I find in a lot of my client conversations, a lot of my clients, they're highly driven, highly successful individuals, doctors, lawyers, accountants, professionals, business owners. And one of the things they really forget, they sit there and think, well, I bring the bread home to feed everyone. And what they really forget, though, is what the role of the stay-at-home spouse often is, or even if they're not stay-at-home, I should say very politely, their income is not what's going to pay the electricity bill. It might send them to Bali for a holiday. However, what they forget is that, and there's lots of studies on, what the actual financial implications that a spouse has on, in their role in the family. But we have choices in life, right? And I know this personally as a husband, that if my wife got diagnosed with breast cancer tomorrow, I'd like to call my boss up and say, I'm going to be with my wife. I've got 62 working days of sick leave, which is 3 months of work. I'll give you a call in 3 months' time and we'll see what's going on.
Of course.
Now, for a lot of people, they don't have the financial means to do that they've got to rock up and go to work the day after, the day after, and the day after. And I've seen it in my own family with some relatives where, my mother's had to take people for chemotherapy and the like because their spouse has to go to work. Putting, I'll call it, a genuine value on the stay-at-home spouse's contribution to the family is so important, because I'm telling you, when something does go wrong, you won't regret having some kind of financial remuneration which gives you choices.
Yeah.
And that's the most important thing, is having, I find, having choices. And don't think it won't happen to us. Sadly speaking, Aditi, there's 3 of us in this room. 2 of us are men. I'm a bit older than the other gentleman in the room, but sadly, statistically speaking, one of us will have cancer before 65, 70 years old. I can't, for me personally, if I had it today, there'd be a fair financial impact on my family's life. So there's that aspect. That dovetails into something I truly believe, and I better credit a gentleman called Russell Collins with this because I've genuinely stole it off him. But debt should last no longer than the person who created it. And I think that's very important in personal life, and equally in business life as well. And a lot of the stuff I do with businesses, especially in this environment, can be very hard to work our heads through. But if I keep it as simple as, if you're a business owner and your business has debt, and that debt can be the overdraft, it can be the maximum overdraft you might have at any one time in a year, your maximum expenses, your maximum debtors ledger. If you've got carrying any form of debt, balance sheet debt, so Division 7A loans, directors' loans, retained profits. And retained profits, we could go to a whole different podcast around that kind of stuff, Aditi.
Yeah.
But if you've got debt on your balance sheet in a business somewhere, you probably need to address it. Because should the worst happen, someone's going to be calling on whatever it might well be. And the solutions are just investing time at the end of the day. And obviously, there might be a financial cost as well in terms of a premium. But whether it's on your personal life or the business life, seeing a good professional that has a good network, whether it be mortgage brokers, accountants, lawyers, their job is to help you understand what it is that's important to you and what your risks are, and to help you put that strategy together to address those, and then work with the other professionals to really put a tight package in place that means, should the worst go wrong, it's all going to be okay.
For sure. Really, really important things to think about. Stuff like, debt shouldn't last longer than the person who created it. Feels like such an obvious statement to make, but so easy to forget about. Thank you so much.
No worries.
For sharing that.
Given you're a bit younger, that's the bank of mum and dad's very interesting there. And I, unfortunately, relationships, was it 49% of first relationships or marriages don't work, and we don't learn our lesson. I think it's 59% of second marriages don't work. And so many people are now going to the bank of mum and dad. Imagine something happened And, you know, me and my family haven't done this, but doesn't mean we're any special.
Yeah.
But if anything happened to one of us, we could quite easily ruin our parents' retirement.
Oh, absolutely. I mean, I think about it now and that, you know, there's things I'm paying for myself. I still live at home with my family. There's things I pay for myself, but there's things that they do provide for me on account of me living with them. And I am over 25, so I have been around longer than perhaps they want me to be.
You're lucky you don't have my mother then. We were told 20. If you're here by the time you're 25, we've got problems.
I think the rent is a little too steep. I think my parents are kind of conscious of the fact that I can't afford that,
yes,
or a house.
The world's changed. I understand
Things
that.
have changed a little, but I'm aware of the fact that I'm a financial burden on them at the moment as well. But I often think about, yes, if something happens to them, it would affect me. But I also think if I had health issues, the stuff that I am kind of, because there are things I can do to reduce the financial burden on them at the moment, all of that suddenly falls back on them, or my little brother who has just become an adult.
Yep.
So it's always something to kind of bear in mind and think about, for sure.
Definitely.
Well, on that note, thank you so much for sharing your insights with me today. Where can the people find you online or anywhere?
Thanks, Aditi. They can find me through LinkedIn, which is Paul Milbourne, Milbourne, so same as Melbourne, or www.paulmilbourne.com.au.
Fantastic. And we'll have all those links in the description and the show notes as well for people who want to find it.
Thank you so much, Aditi.
Wonderful. It's been such a lovely time that I've had today, and I really appreciated the opportunity to chat with you. So thank you so much for being on the show.
Likewise, thanks for having me.
Thank you.
You've been listening to Self-Improvement Atlas, the personal science insights podcast produced by LMSL, the Life Management Science Labs. For more episodes like this from 10 different life management perspectives, search LMSL on YouTube, Apple Podcasts, Google Podcasts, and Spotify, or wherever you get your podcasts, so you can get updated on everything we have to offer. We have a wide range of topics readily available for you to check out. If you enjoyed this episode, please consider rating our show, sharing it, and subscribing to our channel, as it helps us grow and bring you more quality resources. More of our work can also be found on our website at pe.lmsl.net, where you can join our movement. I'm Aditi Kutty. Thanks for tuning in.